Hey everyone, this is Kirk here again at Option Alpha. So Tom in the community had a really good idea a couple days ago after I posted the last video on the end of my Hexabots, which has still been turned off, getting ready to start to prepare to launch the EV portfolio bot and start trading on that live this week. And this was a good comment. It was a really good idea. So kudos to Tom. Great idea, as I said. But he was basically talking about that the Hexabot had a lot of logic and data that we used to do with position tagging, that we still want to do a lot of this too with any positions that we have for the EV portfolio, where it was just looking at like trend and types of profit taking, stuff like that. So is there anything we could kind of learn from that analysis before we move forward? And I think everyone just wanted to see some of the results on it. I thought it was pretty interesting too, because I've seen some of this too. But I want to share some of that so you guys could see that as well. So really quickly, the thing that we're going to look at specifically is mainly these trends. So this was kind of the summation of the Hexabot, which was the 6 different market trends that it was trying to analyze and trying to figure out like what is the best position for these different types of trends. And in the first case, it was whether it's a strong uptrend, a regular uptrend, a weak uptrend, strong downtrend, regular downtrend, or weak downtrend. And you could see all of the different criteria for these different types of trend here inside of this little screenshot here, so you can use that moving forward. But for example, strong uptrend was when the ticker is above its long-term moving average. So this might have been the 200-day moving average. It was also above the short-term moving average. In many cases, it was the 50-day moving average. And the short-term moving average was above the long-term. So, I mean, you literally had everything going in your direction. It was what would be classically defined, I guess you could say, as a super strong trend. The stock is really, really high above all of these, trend indicators. And same thing on the opposite side. So a strong downtrend would be the ticker is below the long-term 200, below the short-term, I use the 50, and the short-term 50 is below the 200 as well. So this would be like really, really strong, aggressive downtrend. Now, did that all work? I don't know. We're going to look at the results and see how it kind of shook out. So this is what they are. So just remember these as you keep going back and forth. So let's start with strong uptrend. We'll go back and forth here. We'll do strong uptrend, uptrend, weak uptrend, all the way down, and just kind of partition things out here, if you will, just to kind of see how things worked out. So this is how it worked for these positions. Again, these are all live trades for the Hexabot. These are the only tags I used in these, so these will only be visible in the Hexabots here. But you can see a strong uptrend absolutely got murdered and had its face ripped off. It was interesting to see that was the case, because what we did in strong uptrend, or the thought process around it, was basically trying to mimic a little bit of like a momentum-ish type strategy, where you take things that have really high momentum in a big, strong uptrend, and you sell put spreads on those. I think a couple times you sold call spreads because RSI was too high, so that was kind of the heat check that was involved in the Hexabot as well. But for the vast majority of these, you were selling put spreads. The problem is you literally got your face ripped off in these because you were selling them. What I would expect to believe to be at this point now, looking at the data, is that this trend was so high and so aggressive that some turns around the market, like the market turning over, and maybe you didn't take enough premium because the market was high and volatility was low, and so the premium wasn't there. You honestly just got your face ripped off on a lot of these positions. Some of the bigger ones that you took some pretty healthy baths on, IWM, XLU, XLE, XOP, all of those ones had really tough markets anyway. So it's almost like you started trading those and the markets turned on those. Irrespective, it just wasn't good. QQQ was the best one of the bunch. So of the ones that were strong uptrend, these again, all tickers or all positions that were tagged in a strong uptrend as the entry point for those positions. QQQ was really good. Gold was really good. But again, you kind of got murdered on the rest of them. IWM, XLU took a bath and did not work out. Funny thing was, you had a really high win rate on these trades ultimately, but this was probably the case of picking up pennies in front of a steamroller. Profit factor was about 0.66, so it didn't really work out. So this is, I don't know, to me, this is like another, like proving the point that maybe some of this classic, trading methodology sometimes helps, sometimes doesn't help. But if you, like, we didn't have EV at this point, we didn't have alpha at this point, so we really didn't know. Okay, so let's look at the other one. The other one is regular uptrend. So we'll toggle uptrend and then untoggle off strong uptrend. By the way, if you're not tagging your positions, you're not using tags, like you can't do this type of analysis, make sure you start doing that. Regular uptrend did really nice. Not too many positions in this case for regular uptrend. This is the ticker above the long term, above the short term, but the short term is below the long term. So it hasn't quite gotten to that strong uptrend. I guess you could say like the super strong uptrend, but really nice. This contributed a lot to the portfolio. Closed P&L for these types of positions, about $3,000, 78 positions, 91% win rate, massive profit factor, which just shows you were just like, you had it like on. It just was working. These, ironically, were all iron condors. So this type of environment, uptrend, downtrend, regularly, were just iron condors. In some cases, maybe a little bit tilted just based on where the deltas were. But you can see that these types of positions, no put spreads, no call spreads in this case. Most of the tickers worked out. You had a couple tickers that were really hard still, like XOP. But in this case, you had IWM ended up being the clear winner here. So it was really interesting to see how those worked out. Okay, so next one that we're going to do here is we're going to do week uptrend. So we'll go down here to uptrend and take off regular. We'll do week uptrend. Week uptrend is basically what it sounds like. It's a super weak uptrend. In this case, the ticker was just above the long-term moving average, but it was below the short-term. So in this case, the ticker would have been above the 50 or above the 200, but below the 50, something like that. This one did really well also. This one had a lot of positions, contributed pretty significantly to the win side of any Hexabot's high win rate. Profit factor not as good, but still really attractive here. You can see that this one had a lot more volatility in its P&L. So you definitely went through a couple little dips where you collected a lot of money and then you gave a lot of it back in a couple scenarios. And then you collected a lot of money. Maybe we would have given it back if we had not turned off the Hexabots at this point. Most of these positions were iron condors. You did have a couple put spreads in there. Again, remember we had those heat checks for RSI and for tilting and stuff like that. So this was a really interesting one as well. Here, the big loser of this bunch was GLD. GLD just, in some cases, got really annihilated on positions and didn't work out too well. So again, interesting one. The strong, aggressive uptrend did not help out. It was too strong to be selling put spreads. If you did more iron condors and regular uptrend or weak uptrend, you ended up doing pretty well. Okay, so next one that we're going to do here is strong downtrend. So let's go here to strong downtrend and we'll take off the weak uptrend. So strong downtrend likewise did not do as well as just like strong uptrend. So anytime it was an aggressive downtrend, it actually started off okay for, I guess you could say, the better part of a year plus. And then it went through a bunch of expiration periods where it just got annihilated again. The end result is that with a lot of positions, and this really kind of took up a lot of position time in the portfolio, probably because most of the back half of the year was some pretty strong downtrends. But win rate was still high. You just were picking up pennies in front of a steamroller. Profit factor was below 1, so that's suboptimal for sure. Just really weren't having a good time in a lot of these trades. Now, a lot of these, again, and it's so interesting to me that this happens, but a lot of these trades were entered in short call spreads because that was essentially what the whole thing was designed to do at that point with the strong downtrend. Was like, if you're in a strong downtrend, don't fight it, play the trend, sell call spreads as the market's moving down, sell them away. But the problem is you had a lot of these like big rips and rebounds and bounces back up that you just couldn't really basically recover from a lot of those. Now, in some cases, we did do some short put spreads. That would be, again, when RSI was super oversold. So you're selling some put spreads in those positions. Those won really well. So that, again, proves our research that we published on RSI being pretty predictable on that side. But these call spreads generally just did not do too well. A lot of these ones like IWM, you had big moves lower, but you also had big moves higher, and they ran into positions. Same thing with XRT, XLE, etc. They just didn't work out as well. Okay, so let's look at regular downtrend now. So we'll go to downtrend. So not a strong downtrend, just a regular downtrend. This would be defined here as ticker below the long term, which was for me the 200, below the short term, but the short term is above the long term. So it hasn't quite gotten to that really aggressive downtrend area. So downtrend, this is very interesting. Again, very cool to do this type of analysis. Downtrend, regardless, not even, and same thing happened on the top side where like strong uptrend didn't work, strong downtrend didn't work, but regular uptrend crushed it. Same thing with downtrend here. Regular downtrend for this group of Hexabots was really, really good. 109 positions, super high win rate, massive profit factor, which was great. Did have a little bit of struggles. Wasn't an easy journey by any stretch, but ultimately turned it around quite a bit. And again, we see that iron condors were the most profitable thing you would have traded. It didn't trade anything else in those kind of like regular uptrend, regular downtrend time periods. We just traded iron condors, and they contributed pretty well. And again, XIWM was a big contributor of that, whereas in other cases, it was a big distractor from it if we got away from trading most of those iron condors. So very, very fascinating. Okay, last one we're going to look at is week downtrend. So we'll go to week downtrend. We'll click that one on, and we'll toggle off downtrend. Now, week downtrend was more of a push. It basically was one that we saw, again, a lot of volatility in, just like what we saw in a week uptrend, where it was, well, I guess week uptrend was a contributor, whereas week downtrend was a slight distraction from the portfolio. But lots of positions, good win rate, profit factor wasn't quite there. It was mostly a push. You did have these periods where, again, it would make some money and then whoop, give it all back in an expiration. So bad expiration period would just rocket it back and give a lot of positions back. In this case, iron condors were very much the not contributor to this one, whereas the short call spreads, again, using some of those RSI indicators, were showing like, hey, if we're in a little bit of a weak downtrend, but we have a huge RSI, we can sell some call spreads against those and take some profits. So it was very interesting to see that. XOP, again, was just an absolute turd for the portfolio, generally speaking. You remove XOP from the bunch, maybe it was totally different across the board, but it's very, very interesting to see how all of these played out. So again, weak downtrend, not so much of a contributor. Here's what I'm going to do here, and I think this is really telling if we kind of combine some of these together. So let's do strong downtrend, and we're going to do strong uptrend. So the combination of strong downtrend and strong uptrend, and again, when you do these tags inside of Option Alpha for your positions, you can do this type of combined analysis where you can look at two types of tags. So, okay, if I had only traded strong uptrend and strong downtrend, right? Like regardless if it was really aggressive momentum, super low momentum, what would I have done? And you could see 642 positions. You had a win rate that was good, but your P&L just sucked. And, or my P&L, I guess, sucked on those positions. And the profit factor was about 0.73. So it really didn't help to trade in those environments, at least the way that we were trying to do it, which we were trying to do the alternate or the like play the trend, play the trade that you had. You just didn't have enough opportunity to do that. And it just gave it back most of the time. So the short put spreads, net loss, the short call spreads, net lost. You only had a couple tickers that helped out, but you had a lot that really didn't work. In particular, IWM just didn't seem to work in those strong and aggressive environments. Too much whipsawing back and forth. Very interesting to see that. Now, let's take the opposing view here and just look at regular uptrend and just look at regular downtrend. So if you actually avoided the times where things were really, really exaggerated on both ends for the Hexabots, and you just did the regular downtrend, regular uptrend, you actually did very, very well. So the combination of that was the biggest contributor to the portfolio, generally in the collective Hexabots being profitable. But you see the profit factor for these types of trades was pretty good. You were in trades, you entered trades about 44 days, you were in trades about 24 days. So it was pretty good contributor, mostly iron condors. So you could basically take off maybe you do take off some of the regular momentum type short put spreads, short call spreads, but you leave on some of those RSI type trades where you're entering positions based on RSI. And you had those iron condors that did really well. The basket of portfolios here, you can see IWM did much better trading iron condors than it did trying to pick and choose sides in this case, which is very, very telling. So kind of mimics a little bit of the 3K portfolio bot. In a sense, it was just kind of doing its thing, trading iron condors. That was also a good market for it generally right now across the board. All right, so last thing we're actually going to look at are those technicals. I forgot that we had included some of those technicals in here. Inside of the Hexabot, we had tagged all of the environments when a position would get into as neutral technicals or overbought, oversold. And so if we saw an environment where we had overbought, oversold, remember we would have that heat check where we might be in a downtrend, but if we're overbought on technicals, we might sell call spread or something like that, right? Where we would use RSI basically as the main one to see if we're overbought or oversold based on our research. So we can actually go in here to positions, and I'm going to uncheck the downtrend and all these, but let's just look at overbought technicals in this case. So any positions that were entered in overbought technicals, this would be where RSI or CCI was really high. And specifically, we were entering the position not for trend reasons, but just for those overbought particular environments. And you can see that these were all in all pretty good if they were overbought. So if you used RSI or CCI as your technical indicator, you did pretty well on these positions. Not too high of a trade count, so I don't know if I put too much salt into that one. But if you looked at, let's say, oversold technicals did, again, really well. 100% win rate. I don't know if I would take that to the bank at all, but just not a lot of trades here. But any of the times where you had really, really oversold RSI, as our research has shown already that we published for free on RSI, it ended up being pretty good positions that you would get into. When you look at neutral technicals, if we take these off and go neutral, of course, you have a lot more fluctuation in the neutral technicals. Overall, you did good, but mostly because you're trading a lot of iron condors in this case, which we saw from earlier, actually ended up working out pretty well. But you can see what actually like visually neutral technicals ended up looking like, mostly a neutral technical, kind of like middle of the road. You weren't too overbought or oversold in many cases, and so you had a lot of variety in here. If you only traded, and this was actually pretty interesting if you look at this one. So let's do only overbought technicals, only oversold technicals. So you only traded just the edges of, let's say, RSI or CCI. That combination ended up doing really well. And so you can see that combination was a big contributor to the portfolio. So if you had iron condors that you tilted or skewed, which we would do, or you traded short put spreads in those environments or short call spreads in those environments where RSI was oversold or overbought, you would have, pretty good performance in there. So it's almost like if you were to continue the Hexabot and you were to strip out some of these pieces and maybe do something a little bit different, you might get better performance moving forward. Now, for the record, I'm not doing that because I'm moving forward with the EV portfolio. Even though I still like all that stuff, maybe we incorporate some of that logic into what we're doing in the future for the EV portfolio. We'll start at regular just based on our testing that we've done and just pure EV type of trades. And then we can start to build some of this into there. But having this data in here to reference is super important. And it gives us a lot of confidence to know that some of these trend things do help, maybe if they're not at the extremes, and some of these technicals do help. Again, maybe when they are at the extremes, you can use those technicals to kind of adjust and readjust positions. Very, very helpful. So overall, I hope you guys enjoyed this video, just kind of walking through some of these analysis and some of this tagging. As a reminder, just like go crazy with tagging inside of your bot and your portfolio. It's really, really helpful to look at how you enter positions, the types of environments that you're into. You can check out our workshop on how you add tagging to your portfolio. It's really, really easy to auto tag positions as soon as they get in, your bot gets into positions. And then you have this data that you can kind of look at for all eternity, I guess you could say, as long as you have your account at Option Alpha, and kind of do the analysis for yourself and kind of see what works and what doesn't work. So as always, if you guys have any questions, let me know. Until next time, happy trading.